at the outset, the broader market valuations are looking a bit on the higher side, and that is what is making the investors a bit uncomfortable. Um, but I believe that the mid caps and the
You're with us here on BTTV. I'm Abha Bakaya. Let's take a look at markets and how they're doing today. Cooling off, really. That's what we've been seeing now gently over the last couple of sessions. Down about 160 points on the Nifty, and Sensex also down about 500 points. Profit booking in full swing this afternoon. Vineet Bulijkar joining us as well to take us through his views on the market and really some of the top picks on his radar. Vineet, of course, is joining us from Ventura Securities. Vineet, bit of pressure building up there. Are you worried? Is this just profit booking? Are you watching out for a particular range or downside?
So it's definitely about a profit booking, and I would like to, tell our viewers that, this repricing of interest rates that is happening globally is more along, rates returning to normal levels, what they should actually be, right? And the rate increases are here to stay. So if any of our investors watching the show are expecting that the rates will go back down to the zero levels, that is not going to happen. That was a thing of the past because we are now into a quantitative tightening cycle. And if you go back down memory lane into 1940s and the 1970s, that time the average inflation in the Western world, particularly in the US, was averaging between 9 and 15%. And we are returning back to that normal as the world is now emerging on an infrastructure capex uh, blitzkrieg. So, we are going to be seeing huge capex creation in the US close to $1 trillion. And, the same is going to happen in Europe, and India is also undergoing a massive increase in capex. So, we can expect interest rates to remain high as the world curves back on the liquidity that was belted out into the system during the COVID times. So that supply side plus demand based inflation is going to lead to inflation being sticky, and you have to build it into your psyche that the inflation is here to stay.
Okay, so in light of that, and I know, Vineet, you've added, PNB Housing to your watch list. Take us to the rationale there, and how the current environment is going to play into investments, for example, in some of these housing finance picks.
So, if you were to, map the housing finance landscape, you will find that after HDFC Limited, there are very few players, pure housing finance companies in the block, right? And that leaves the mantle for a lot of these companies to come in and grow. We believe that PNB Housing, which has a sizable portfolio of 60,000 crores, is very well placed to benefit from this gap that is there. And our reasoning is as follows. PNB Housing did have a checkered past because from 18 to 21 we have seen a lot of NPA build up due to in the real estate space due to the NBFC crisis, and PNB was left with no exception because they had lent significantly to the realty players. Now that corporate book is deleveraging very fast, and they have booked their losses, and there are some accounts close to the tune of around 890 crores, which are going to be resolved in the positive side. So that NPA baggage is going away. The the company also did a rights issue for 2,500 crores, which gives it growth capital, and we believe that over the next 3 years, the 60,000 book should be north of 100,000 crores, and with that, we are expecting a 16 to 17% increase in earnings growth, and with in NPA levels coming back down to the industry standards. So this kind of improvement in asset quality, growth coming in, and earnings growth also picking up, and valuations at 0.8 times to book, plus a very successful new CEO in place. So the CEO who is in place is earlier was with Canbank Housing, and he had done a very stellar job of growing its book, and it is reflected in the price to book multiple that Can Bank Housing enjoys at the current. So, it's one of the most expensive HFC players. So we believe that the same kind of story can play out in PNB Housing. We are very confident of the company's growth plans, and we believe that you are getting a low risk play with a high growth trajectory, with all the growth drivers firing on four cylinders.
All right, fantastic. One of the other stocks I want to focus on today is Kalyan Jewelers. That one's moving, good set of numbers, but also aggressive expansion that we've seen pick up in the last quarter, and they've also talked about plans in terms of new store openings and so forth going ahead. What's your take on Kalyan Jewelers, particularly given it's 5% up today? We've seen the move on precious metals as well. Are you excited by the kind of outlook they've provided?
Definitely, we are very, very positive on Kalyan Jewelers. The stock might look a tad expensive, but the way they are rolling out their business plan, the way they are fashioning their growth trajectory, going using the FOCO model, which is franchise owned company operated model, is going to be very, very positive for the company. They are going to be putting up 50 stores every year, and they're also expanding in the Middle East, and they're working in the direction of improving the return on capital employed. So we think that it is a very, very gainful strategy. But I would like to tell investors that the stock has run up almost 40% in the recent couple of weeks. So there can be a bout of profit taking, and you would have to buy this, but you will not expect such a fast growth coming in. Having said that, let's look at you know, the the landscape that is there. And beyond Titan, which has a 5% market share, the market is humongous, absolutely unorganized, and it is now getting into the grasp of the organized players. So the momentum of shift of unorganized to organized is catching up steam, and we believe that Kalyan Jewelers, along with the other players in the industry, will definitely benefit from this trend.
Talking about other players, let me bring up Titan because this one's hit a record high on 20% rev growth in Q1. Let's bring up the stock today as well. I just want to take a look at where it's at. Any kind of outlook on Titan or the kind of what would you invest in if you had a choice, within some of these names?
So I think Titan is definitely a stock which has done really well, and its business model is proven. We also believe that Kalyan's model is a proven play. Thangamal Jewelry is another good stock, but definitely I would be putting my money into Kalyan Jewelers.
Okay, nice. So that's the key pick coming in there. Shares up after the Q1 update on Kalyan. Anything else that you like at the moment, Vineet, given we're heading into monsoon? Not heading, we're kind of there now. There's been a lot of talk about consumer and... Sorry, go on. We'd love to hear your view.
So I would like to present a stock which I presented early on the show.
Okay.
I like Lloyd Metals. It's a very secular story. What we like about it is the fact that they have increased their production to 10 million tons. Their plans to take it to 17 million tons, and it's a company without debt, and they have capex plans. Hovering around 7 to 8 thousand crores over the next 4 years. I'm talking about Lloyd Metals, and we expect Lloyd Metals to complete this expansion plan without raising any debt. So, there's going to be a massive plowback of the internal generation. And what is more is that this entire capex is subsidized by the government of Maharashtra, who will be repaying this in the form of GST refunds over the next 12 years. So we think that the stock is very cheap. If you look at it on EV by EBITDA terms, the stock will look very, very expensive and overvalued. But those who go by these metrics will miss the bus. You need to do a deep down dive down, do the look at the free cash flow generation, and then buy the stock. I think this stock can double in the next 18 to 24 months.
Okay, great. So we have a few key picks coming in there from Vineet today. Lots to track in markets. Otherwise, of course, trending a bit weak in today's session, but nothing to worry about. A healthy booking, and really, as Vineet said, the rate environment is here to stay. So to really plan your strategy in line with that. Vineet, thanks so much for joining us. Great to get some of those picks from you. Have a great weekend. Markets at this are still trending lower, close to a percent now, 65,216 on the Sensex, and Nifty at about 19,300. Thanks for watching.
Already, Maruti Suzuki has now taken a giant, huge leap when it comes to manufacturing premium products, and I'm joined by the managing director of Maruti Suzuki. Thank you, San, for joining us. Invicto is here. Maruti has taken a huge leap when it comes to premiumization of luxury vehicles. Nexa channel is now officially has one of the best vehicles that Maruti has ever manufactured. First question to you about the pricing, sir. Do you feel that it could have been priced a little bit lesser in range of 20 to 21 lakh so that the consumers could have been more attractive vis-a-vis a 25 lakh odd starting car, sir?
Well, this is really the top line of Nexa, and I believe with this price we have already got more than 6,000 bookings. So with this price, I'm sure that the booking will further increase, and I think as a top line, this is appropriate level of the price. And on top of that, I think the Indian market is evolving, and the Indian consumers' buying purchasing power also increasing, year by year. So I think I believe that the Indian market has the power to absorb this kind of products, and it will, even expand.